If there is a common thread that weaves through some of this year's biggest technology stories, it is the inevitability of change and the disruption that follows. Bitcoin built up interest in the trading of virtual currencies, which was embraced by startups as a way to raise funding from savvy investors without being subject to regulation. Bike-sharing services quickly caught on in China, where pedal power combined with the efficiency of mobile apps and digital payments to create the country's hottest transport trend. News on major high-tech initiatives in Hong Kong and the mainland were typically dominated by Baidu, Alibaba Group Holding and Tencent Holdings, the Chinese internet triumvirate collectively known under the acronym BAT. The activities of those three companies continued to grab headlines because of the intersecting spheres of interest they have created in the fields of online search, e-commerce, gaming, social media, financial technology, cloud computing and recently, artificial intelligence, AI. What follows represents some of the most widely read tech stories in the South China Morning Post this year. Riding the cryptocurrency wave. While stock markets around the world reached all-time highs this year ahead of the U.S. Federal Reserve's interest rate increase on December 13, their gains were relatively insignificant compared with the performance of cryptocurrency Bitcoin. The world's most traded digital money, Bitcoin has grown in value from about 39 US cents to more than $18,000 in just 8 years, while doubling over December with $290 billion in market capitalization. Although Bitcoin has thrived, concerns linger about a cryptocurrency bubble and potential fallout from unregulated internet coin offerings, ECOs. In September, China's central bank banned ECOs, fundraising through cryptocurrencies, calling the practice illegal. The People's Bank of China said that 90% of ECOs launched in the country were found to be fraudulent. If things were still the way they were at the beginning of the year, over 80% of the world's Bitcoin trading and ECO financing would take place in China. What would things look like today? Central Bank Deputy Governor Pan Gongsheng said earlier this month. It's really quite scary. The clampdown, however, has not deterred Bitcoin investors who have moved their trading to peer-to-peer exchanges. So expect usual family dinner topics during the Christmas holidays to be shoved aside, as you or your relatives regale each other with real and virtual profits from cryptocurrency trades. Bike-sharing blues. China's bike-sharing market had been one of the most popular new sectors for private equity firms, venture capitalists and angel investors. It has attracted more than $2 billion in funding over a 19-month period. Hello Bike earlier this month raised $350 million from investors led by Ant Financial Services Group, an affiliate of post-owner Alibaba. Intense competition, however, has whittled down the number of operators even as the people who use mobile apps to rent bikes had reached 106 million by the end of June. From a peak of about 100 bike-sharing service providers competing across the country, there are now just 3 major companies with deep-pocketed investors, Mobike, Ofo and Hello Bike, that can potentially survive another price war, which have steadily decimated the ranks of these transport startups. The latest issue facing bike-sharing firms: what happens to the deposits paid by users to providers that have gone under. One stub Uber for bikes. China's bike-sharing industry is predicted to be worth 23.68 billion yuan, $3.6 billion, by 2019. According to iResearch. Beyond rental revenue and prospects for advertising, bike-sharing providers have helped promote mobile payments and gathered plenty of user data that can be analyzed for consumer patterns, giving insight to marketers and businesses.